last thing I really love about it is the watch list. So long IRA, this is my IRA watch list. And boom, everything in my IRA I can see right here visually, because if you don't use like net margins, if you don't look at net margins to invest, and you don't know if a company is going to be profitable, you digging yourself in a hole. If you buying in this overvalued and you're a beginner, it's gonna put you in a predicament to where it's like, it's gonna pull back eventually. All right, what's up YouTube? Hey, this right here is gonna be the most informative video on how to use the screener on Tradingview. This is the stock screener on Tradingview, and this is how you're gonna find stocks to buy in under 1 minute. That's gonna be great. But I ain't no financial advisor. I'm just giving good advice and giving out my knowledge about the stock market and about Tradingview. So we finna dive right into this. First thing first, you wanna go to Tradingview or download that. Use the browser. The app can't do this on your phone. Go to the browser, get a tablet, get a laptop, go to the browser, go to screeners and hit stocks. First thing first is you wanna add all of these tabs right here, right? Click this add button, you see market cap. Market cap is important. I'm gonna put all these on the screen. Market cap is important because it's gonna show you how valuable the company is on the stock market. You know what I'm saying? Nvidia is the most valuable company on the stock market. It's worth $4 trillion. Then we got Microsoft, Apple, got Walmart at $804 billion. Then you wanna add all of these names. So add market cap, boom, add the change percentage, because it's going to allow you to see how far the price changed in the time frame you want to see. Like me, long-term holder, long-term buyer. If I'm on a monthly time frame and a good company dropped 20+% on a monthly time frame, hey, that's good news. Buy low, sell high. They undervalued, buy at the undervalued level, sell when they overvalued. That's what that change percentage gonna help. Price is just gonna help you know how much it costs per share. 171. Walmart costs 100 per share. Microsoft 500 plus. Eli Lilly 742. RSI is another important thing. It's going to tell you what this tells you, but it's going to tell you what this tells you, but in the screener form. So it's like, okay, I don't have to go to Walmart to see Walmart is at a 73 RSI. I can just come here. Well, let's go to the weekly time frame because it's on the weekly. I don't have to go to the chart to see Walmart. Hold up. Walmart 1 week. Boom. RSI is at 57.67. All right. Boom. Walmart is letting me know I ain't gotta go check. I want to buy low when it's near 30. So it's like, boom. I'm gonna show y'all another faster way. This is an even better way of using the RSI. Just put 30 and below on the monthly. You can change it to the weekly, you can change it to the daily, you can change it to 1 minute. But listen, the smaller the time frame, the more you're gonna get faked out and the more inaccurate it's gonna be. The higher the time frame, the more accurate you will be able to move, because the more data the more data you have in one candlestick. So the more data, the more information, the more confirmation. If you're using a smaller time frame, it's gonna be less data, less information, less confirmation. Even though they both can confirm a buy is gonna be stronger to confirm on a higher time frame than a 1 minute, you know? And we got all of these companies are on a weekly time frame below the 30 RSI. And that's all we did. Not only that, we got it descending from the most valuable companies. So it's like, okay, the most valuable companies at the same time being the most undervalued. Then right here we got net margin. Boom. If you don't want to see no unprofitable business, boom, put 0% and above. But me, I like unprofitable businesses if they're gonna be profitable within 2 or 3 years, you know. Net margin 0% and above. This is important. This is important. This is important. This is important. Well, this is important because it's important because if you're a dividend investor, you're gonna want to see your dividend yields. I ain't really no dividend investor, but I do love to see them dividend yields because the more dividend, the more free money. Debt to equity is great to use because you don't want no company with high debt versus equity. Free cash flow is great because you want to see, if it's not that you want to see it's great to see a positive free cash flow is extra confirmation. But even if it's negative, it don't mean it's a bad investment because it could be profitable in the next month after this. So if they're gonna be profitable, it's still a wise investment. But just because they free cash flow negative don't mean they whole company negative. Return on equity is great, current ratio is good, to let you know if they can pay off their debts and everything and all their liabilities. And volume is important. You got a lot more things you can put on here. Price, you can do 10 to 100, and then you can also I wouldn't say if you're a beginner, I would say follow a strategy that's already been tested, or a strategy that works like this one, or one you saw previously that you studied previously. Because if you don't use like net margins, if you don't look at net margins to invest, and you don't know if a company is going to be profitable, you digging yourself in a hole. If you buying in the if you buying in this overvalued and you're a beginner, it's gonna put you in a predicament to where it's like it's gonna pull back eventually. And if you buy before the pullback, once the pullback happens, you in it. But if you buy at a demand area, or if you buy at an area after the pullback, then if it pull back, it won't be much. Or if it pull back, it might hit your stop loss. But if it do pull back from a demand area, it won't fall as fast as it would up here. Because if you buying some shit up here, it gotta fall all the way down. If you buying some shit here, it gotta fall down. So look, from here you got $100 investment, it go all the way down to zero. Right here, you started $100 and it go down just a little bit, and you only lost 20, so you still got $80. But you managing your risk by buying at demand areas instead of overvalued areas. That's what the RSI gonna help you out with. Then you can check out sectors, because when you're analyzing stocks, you want to judge them within their same sector. So it's like, okay, if I'm looking at finance stocks, but you want to judge companies in the same sector, because I can't judge a retail company and be like, oh, a retail company only profited 10% when Microsoft profited 36%. Like, the retail company is still solid and good just because their net margin is at 10%. Microsoft is good at 36%. But you can't compare an orange to an apple. You're comparing a retail company to a technology company. They gonna have different numbers, they gonna have different numbers. But this is the gist of the stock screener. And the last thing I really love about it is the watch list. So long IRA, this is my IRA watch list. And boom, everything in my IRA I can see right here. Boom, it's right here for me. Like I said, it's negative, it's gonna be profitable. It's negative, it's gonna be profitable. It's negative, it's gonna be profitable. If you're gonna invest in something with a negative net margin, you gotta make sure they're gonna be profitable. I gotta delete this off my shit because I ain't got them no more. But yeah, see, most of these are in different sectors. I can't judge a transportation to finance because their numbers gonna be skewed. Of course, finance gonna be profitable. They know what they doing. But yeah, that's all I got. Yeah, this stock screener gonna help y'all find some shit in under 5 minutes. But appreciate y'all for tapping in.